Business owners, entrepreneurs, thank you again for joining me on this other episode of the Broker Insider, where I'm actually going to be going into a strategy on how to get a business loan with bad personal credit. Okay, I'm going to try to be as transparent as possible throughout the entire process. Number one, that's kind of our business model. We don't like to hold information back. And then number two, we don't like to do the typical bait and switch type of marketing that a lot of these other brokers are honestly doing. So, in order for you to get approved for any type of business loan, or even a personal loan for that matter, a lender is going to take a look at your profile and consider really three different components. Number one, is there any type of collateral that you're going to be posting or pledging towards the loan? Number two, what type of revenue are you or your business generating? And then number three, what is the personal credit? So obviously, you're watching this video, you might have bad personal credit. I'm going to show you how to take the revenue component of your business to help get you into some type of working capital loan. So, with that being said, I am going to be making a video in the future about the best type of startup funding, pre-revenue funding that you can get. And then number two, I'm going to be posting a video later on the best types of collateral to have and to pledge against the loan. But for the purposes of this video, it's going to be a existing revenue generating business with a business owner that just happens to have bad personal credit because, hey, life happens, shit happens. How do we get over that? How do we overcome it? Those are the answers that I want to give you today. So, first and foremost, when I say bad credit, what exactly does that mean? Here is the chart of what the breakdown is for your FICO score and what category, what rating a lender would take a look at. Now, this rating is probably more geared towards the consumer financing aspect. Again, trying to be completely transparent with you folks from a business lending perspective, kind of the magic floor, the magic number to have is a 680 credit score. Anything below a 680, you are still considered higher risk. So if you're watching this and you're like, "Hey, I've got a 650 credit score. I'm in the fair category." Trying to be as transparent as possible, the lender is still going to look at your credit file as higher risk. Now, if you happen to not know where your credit profile is, I would highly suggest visiting the link that is just below this chart. That is a service provider. It is a trusted service provider that we use and we refer all of our clients to for the primary reason is that how they generate your FICO score on their page is exactly the FICO model that a lot of our lenders use. So, using them or for you to be able to submit a FICO score to me that is generated by this service provider will allow us to get a good estimate as to where your credit actually is without additional inquiries showing up on your credit score, which will help to preserve its current rating. Now, if you're using like a Credit Karma or some of these other free services, their FICO model, the one that they use is very different. So there could be a 20 or 30 point variance, either plus or minus, from the score that an actual lender would see if they were to run your credit report. So that's why it's important that you use the same type of FICO model, and thus why we are trying to refer you to this particular service provider. Plus, it's never a bad idea to actually know what's going on with your credit profile and see what tips and tricks you can do because they have a score simulator on there that would allow you to forecast what type of impact certain actions would have on your credit profile in the future. So once we actually start considering revenue-based loans for your business, here are the key questions that we would need to actually ask and find out whether or not this is something that would be worthwhile for you. First and foremost, how much money do you need? Again, kind of giving you some insider information. Typically, a lender will allow you 16 to 18% of your gross revenue for business loans. What does that mean? Let's say your business is generating $100,000 a year in gross revenue. The most a lender would give you is about $18,000. So if you come to me and you're like, hey, Jose, I need $50,000 to do a particular project, but your business is only generating $75,000 a year, chances are you're not going to get approved for that dollar amount. So we would have to come up with other strategies to help supplement what the lender is going to come back at. But that's a very important factor to consider. Most people don't even sit down to really think, hey, how much money am I going to be needing? Second question is going to be, what are you going to use that money for? These types of loans are a cash injection. If you need to, for example, go out and buy some type of equipment, that's a completely separate category. We might be able to use both and get you both working capital and equipment. However, this particular strategy is to get cash injected into your bank account so that way you can use it as working capital. And then finally, how long is it going to take for you to pay this back and how quickly do you need it? If this is the type of loan that we suggest you actually look as more of an investment towards your business as opposed to covering expenses. If you are using the loan just to cover expenses, just to get you by from week to week, I would be the first one to tell you, hey, you know what? This is probably not the best thing for you because it's going to put you behind the eight ball. These loans can catch up to business owners and chew away on their cash flow. So that is why we suggest making sure you're investing it and that it's actually going to give you an ROI, a return on investment, as opposed to just not asking many questions, taking the loan, getting the immediate satisfaction of getting the cash flow and paying off whatever debt. But if you're not actually generating additional revenue, it's going to come back to bite you in the ass. And then how fast do you need it? If you're looking for capital just to have as reserves, there are other forms of capital that we can go after. Again, this is something that you would need immediately, not something that you're planning to have or needing access to in 3 months from now. If that's the case, then I would say, hey, you know what? Let's just wait until the need is there or for the opportunity for you to invest into your business is actually there. Now, what is the difference between working with a bank and working with an alternative lender like BDA Solutions? First and foremost, if the primary or the deciding factor in you taking on a loan is your APR, I would highly suggest just go straight to a bank and get yourself a loan there. However, the process is going to be very different. Number one, you're going to need a strong personal credit score. I'm talking 720, 740 plus. Number two, you're going to have to be in business for at least 2 years and generating over $250,000 a year. Those are kind of the minimum standards that a traditional bank is going to have. The benefits of working with an alternative lender are that we can get you into a working capital loan with as little as 6 months time in business. Our credit requirements aren't nearly as strict. We can help business owners with credit scores as low as 550. Plus, our revenue requirements aren't nearly as strict either. We can help you get a working capital loan with a consistent revenue starting at about $10,000 a month. Now, that is not it is a minimum of $10,000 a month, not an average of $10,000 a month. Okay. So again, trying to be as transparent as possible. not trying to hide any, X factors or trying to get you to apply for something that isn't going to work out for you in the long run. With regards to the types of vehicles that we have available, most banks will be able to offer term loans and business lines of credit, however, and even equipment financing, but they are going to be restricted as to what industries they can actually lend to. With us, we normally don't have those industry restrictions. So if you're looking for a term loan, a business line of credit, but your bank is turning you down because you're in the wrong industry, come take a look at us. We might be able to get it done for you. We'll be able to get it done faster with less paperwork, and it will be much more efficient so that you can get on your way to investing and managing your business to help start generating additional revenue. Now, what is the difference? Kind of even narrowing it down even more between working with us and working with another broker. The delta, the difference is I want to dissect this particular real life example that we just went through over the last 7 days. So we just helped a business owner out of Minneapolis, Minnesota get approved for a working capital loan. Kind of the background on her. She's had her business for over 2 years. She's generating over $100,000 a month in gross revenue. However, her FICO score is kind of what was holding her back from being able to get ideal funding. Her score was at about a 535. So we were able to get her approved for a $50,000 working capital loan. However, the payback was $75,000. Now, before you start going crazy and saying, holy shit, why would somebody get into a loan paying back $25,000 in fees? Hold your horses. If you were working with another broker that really couldn't give a flying duck about where you were, what you were doing, they would get you approved for your $50,000 working capital loan. And if they were in a good mood, they might say, thank you. Thank you for your business. And I'll try you again in a few months. The difference between working with them, somebody that doesn't care whether or not your business goes broke, working with us, we actually helped her configure an investment plan. What does that mean? So the reason she was looking for capital is because she had just gotten approved for her liquor license. So that liquor license would allow her to generate more revenue, and she was looking to build a bar. The bar was going to cost her about $25,000 to get built. She got approved for 50. So what we did is we actually ran the numbers and said, hey, you know what? Take the 25,000, build your bar, leave the remaining $25,000 in the bank and don't touch it. Why would we do that? Number one, it's going to allow her to not have to dig into her regular cash flow in order to start paying back the loan. Number two, we're going to need a grace period in order for her contractor to build out this bar. The additional $25,000 in capital would allow us to do that. Once we actually sat down and started going over the projections as to what this investment was going to have on her business, if she did not build the bar, she would be able to generate an additional $20,000 a month, which isn't bad. However, having the bar built, she would be able to generate an additional $75,000 a month with the bar, having an isolated area where she can promote some of the fun party stuff. She can start selling private events with liquor, and those are highly lucrative business activities for her. So when it comes down to it, without the bar, she would be able to make an additional $240,000 a year, which again is not shabby. However, with the bar, it's an additional $900,000 a year. So let me ask you this. If I were an investor and I came to your business and said, hey, you know what? I'm going to invest in your business. However, at the end of it, I'm going to charge you an additional $25,000 once you're done paying back my loan. However, you're going to be able to generate an additional $900,000 in revenue. What would you say? You would take that all day long. So those are the types of questions the lens that we take a look at when we're going over a funding profile to make sure that it makes sense. Because the loan has an expiration date, her revenue will not. She will be able to reap the rewards of the additional revenue, but that loan is going to be paid off at one point. So that's going to come off of her books. Now, the main difference between working with us and working with another broker is just this: we're going to be able to fix her credit, and we're actually fixing her credit absolutely free. We're not charging her anything. The reason she's in this situation is because she had bad personal credit. So we were able to get her working capital despite her lower credit score, but we're going to be able to be that difference and actually play a role in improving her position so that the next time she needs capital for her business, hopefully she doesn't, but she can literally go to a bank and say, hey, you know what? Here are my needs. Can you meet them? And that's, in all honesty, what we're looking to do. Whether or not they come back to work with us, it doesn't matter. But our goal is to help business owners, even though we may not be there to reap the rewards of their improved position. But that's what we're here to do. We're here to help them improve. And most brokers in the space don't care. All they want is for you to fund with them. And once you do fund with them, they're out of the picture. We're trying to partner up with you and improve your business, improve your position. So that way, hopefully, we can earn more business based on what we're able to accomplish, the results we're able to get, as opposed to the commissions that we're trying to earn. So, if this is of any interest to you, please give me a call, 872-265-1570. We can help put together an investment plan for you and your business, help improve your credit position so that way you are no longer having to make these tough decisions. We are here to help our business owners, our clients get into a better position 3, 6, 9 months from now. Trust me, BDA Solutions is going to be the reason why your business has improved. So again, get a hold of me, 872-265-1570. Go to our website, bdasolutions.biz. Looking forward to the next time, guys. Stay safe, take action. Talk to you guys soon.